Be Wealthy and Smart, episode 1009.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about why buying the dip is a good idea right now. Even though we've had all this volatility and we've had markets up, markets down sharply in both directions, I think this is the week where you're going to be happy you bought on any dips. And that's because we have the Federal Reserve meeting this week, and they're likely to make a 25 basis point hike, or 0.25%. And I think that's going to ultimately help strengthen the market. The market's going to like that news because it's going to seem like the Fed is doing something about inflation. They're being proactive, they're taking action, and I think ultimately that is going to help the markets rebound. So I think buying stocks on any dips that we have this week, you're probably going to be happy that you did that in the very near future. One of the things you might want to consider is taking a look at Amazon because they did announce a 20-for-1 stock split, just like Google did, and also a small share buyback program. Now, to participate in Amazon split, you have to buy Amazon stock by May 27th to qualify. And that is assuming it's approved at the annual shareholder meeting, which I'm sure it will be. June 6th is the first time it starts trading on a split-adjusted basis, but nonetheless, you have to own it by May 27th in order to turn one share into 20 shares. Now remember, we talked about this on the Google split situation. There's really not anything that a split does for a stock, except it's a psychological boost, and a lot of investors like to participate because they like to have more shares. And so it does attract people to buy some more of the stock. But ultimately, whether you own one share at $3,000 or 20 shares at $150, it's 6 of one, half a dozen of the other. But because I am bullish on Amazon and Google for the long term, I think if you can pick these up pre-split, you'll be happy that you did. So I would say, again, on any weakness, on any dip, and I think Amazon is prone to have a little bit of a dip here. Amazon gapped up on the news, and I think it could have a pullback here. So on any pullbacks, you might consider that would be a good time to get into Amazon if that's something you want to do. When I look at the metals, which have been such strong performers for us this year, silver already is up 11.17% in just 2.5 months this year. And our mining stocks are up 13.5%, 15.5%, and 19.5% in the first 2.5 months. They have been super strong, particularly when most everything else is in double-digit negative territory. But the metals and mining stocks are looking overbought and ready for profit taking. So I think you have to let them do a little bit of a sell-off here. People are going to do some profit taking. It's just looking very overbought. This wouldn't be the place where I would want to enter on some of the mining stocks. So let them have a bit of a pullback and wait a little bit, maybe even into early April before you really can pick up the mining stocks at a lower price. What's interesting is that stocks may bottom this week, so I would say buy on any weakness. We have a strong stock market ahead that I've been telling you the second quarter and the third quarter look particularly strong, which could be from the market liking the 0.25% interest rate hike and understanding that fewer hikes are going to be expected this year, which will also help to stabilize the housing market, which is good for the economy. We also have the dollar, which has been strong, looking to get a little weaker in value. We might have more people move out of cash and into stocks, and more money may come from foreign countries into the U.S. as our market rebounds. There's always the possibility of peace talks and deals being struck, so you never know. Should something like that happen, that could really help the market. That and also the economy really opening up and pandemic numbers being much lower is also good economic news for the market. So we'll see the market get a boost from that as well. And while oil has been high, I don't see it staying up there all year. I think in the second half of the year, we're going to see weakness in oil, and that's going to help dampen inflation. So I would encourage you to take advantage of buying stocks on any weakness, particularly tech stocks or the S&P 500 small caps. And I would encourage you to wait for more weakness in metals and miners before buying those, because they have yet to dip. They've just been really strong this year. And Amazon and Google, well, they're good goals if you can afford to buy shares in them. It is pricey, but getting a 20-to-1 stock split is awfully tempting. And if that's something you want to participate in, then again, any sign of weakness is a good time to pick up some shares. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available so you never miss one of them. And my entire wealth mentoring library is on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly free email newsletter, which is on the pop-up that comes up when you visit the website. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.